Let's talk then about the prospects for the energy markets. We have with us right now Christopher Haines, Global Crude Analyst at Energy Aspects. Christopher, appreciate you taking our time to join us for this interview. Do you see this possibility? I'm going to straight, shoot it in the head. Do you see the possibility of oil seeing a further slide in the near term? We've broken $30. Do you see us going further lower? Do you see a possibility of $10?
I certainly think we're going to head towards that. We've got to test that just purely because currently we've had so much demand destruction. I think if you look around the world, what governments are doing to try and prevent the spread of the coronavirus, we're seeing lockdowns in some countries. We're seeing a huge amount of flight cancellations. There's a massive, massive decrease in the amount of demand. And the issue there is it doesn't really matter how much OPEC and Russia produce, because we've got such a big hit on demand. That's what's going to really push prices down. And we need to get to a level in price where we start to push back on supply. And that's going to be, in the 15 to 20, possibly below $15 per barrel range.
So it's going to be a demand problem at this point of time, which means, Christopher, that let's say if we do see Russia and Saudi come back on the negotiating table, since it's pretty clear that neither of them can actually afford this sort of a price war. I mean, IMF says that Saudi needs crude to be at 80 to be able to meet its expenditure. Of course, it's cutting off its expenditure, but still, I'm sure it'll need crude to be at 60, 70, 80, and thereabouts. Similarly, Russia too needs crude to be at 40. So clearly, neither of them can afford this price war. So in the eventuality of both the countries coming back on the negotiating table and, saying that, okay, let's cut output, do you still think that then may not be much of a rebound in crude simply because the underlying demand itself is so weak?
So, I think there's two questions there. Firstly, yes, this is too expensive. Where we are at the moment, the Saudis and the Russians are not going to be very comfortable, but nobody's going to be very comfortable. I think if you look across the world, there's a lot of high-cost producers such as Canada, Kazakhstan, USA, Brazil, Mexico. All of these guys are going to be struggling very, very much at the moment. And the thing is that they're not set up quite as strongly as perhaps Saudi Arabia or Russia in order to deal with a relatively long time of low oil prices. So I don't think Russia and Saudi Arabia need to get back to the table. The other thing is the demand issue. Just the nature of how everything's been shut down, I think, in terms of reaction to stop the coronavirus, it should be relatively transitory. This might just be a couple of month, maybe 3-month hit to global demand, and then it returns. In which case, there is, again, point in perhaps OPEC looking and deciding whether they want to cut production. I don't think that would be the case. I think this is going to be a fight war to push out the higher cost producers. But there's still a possibility OPEC's meeting again in June.
Okay, fair enough. What sort of a glut are we looking at then in the market, in the oil markets at this juncture, with demand being where it is and, prospects not looking very good? And of course, with Saudi saying, look, I'm going to pump out 12 million barrels. Russia as well saying Rosneft too is going to increase their production. What sort of a glut could we look at in the crude markets, pardon me?
So I think in our balances, what we're looking at for April is that global demand could be as much as 10 million barrels, but potentially even more lower than it was last year. And I think that kind of a hit is unprecedented. Typically we have constant growth in the oil market. You see like a gradual tick up, and then when you have a recession, you see a little tick back. We've never seen anything like a 10% hit to global demand, and that's significant in a market that's very, very tight. So I think this is the kind of glut that we've never seen in history. So we're going to be testing a lot of the infrastructure to see how much storage there is, to see how the market copes with it and what they're going to have to do in order to cope with it. So we're going to be building a lot of inventories, and prices are going to be low for quite a while, I think, certainly for the remainder of 2020.
Okay, this is going to be one of the biggest gluts that we've seen in oil market history. Storage, etc., will have to be looked at, and of course, this is something that could continue to cause pressure in in crude prices. Now, Christopher, what do you think can trigger any sort of a rebound? I mean, is it purely going to be this long wait to see the aviation industry come back to normalcy, to see economic activity coming back to normalcy? And even then, if that does come about, it's going to be obviously very arduous and a steady journey. It's not going to be an overnight, return to normalcy, of course. So do you think crude as well will take its own sweet time to show any sort of rebound or recovery, or do you think it'll just probably react in the first instance of there being, a flattening of the coronavirus cases?
Yeah, so I think what you'll see is first you'll need that economic pickup, and we've started to see some of that in China already, with flights being reinstated, increasing traffic numbers, people going back to work, industrial activity improving. The main issue is that in Europe we're just starting to kind of clamp down and deal with this issue. And same in America, and they're two of the biggest economic areas in the world. So we're going to be going through the same kind of things that China's been through over the next month or so. So until that tides over, we're really going to be struggling to find some kind of a bid in crude. And while that's happening, we're still going to get these inventory builds in the crude market, and that's just going to put more oil in stock. So when we do come back, and when there is demand again, we're just going to be, full of oil everywhere. So there'll be plenty of oil around. I do think one potential positive is when the economy does start to come back, we've got a huge amount of government stimulus being put in all over the world. So we might see a really, really significant dip in Q2 GDP numbers globally, potentially even Q3. But we should start to see some of that stimulus coming through towards the end of the year. And if the virus clears up, if it doesn't return in Q4 again for flu season, then we could see a much, much better picture.
Okay, all right. Christopher, we'll leave it at that. Thank you so much for joining us and sharing with us your perspective on how crude prices could move. The picture is not exactly enthusiastic, with inventory levels at never before seen levels. You have demand as well, the picture looking very, very bleak. And on top of that, you have the price war. According to Christopher, one cannot rule out crude prices going to their mid-teens. We will take